So we got data today, and what the headlines read today was that inflation is heating up, but not enough to stop the Fed from cutting rates. If anything, it was just the breathing room that the Fed wanted, and the stock market seen that and completely loved it. So today, all three major indexes ripped higher on today's print after that inflation data came in. It came in slightly above August, but below expectations, so keeping the Fed on track for rate cuts. This led the Dow to jump 1.1%, 1.01%, the S&P 500 up 0.79%, the Nasdaq popped 1.15%, all three closing at record highs. Investors basically looked at this and said, hey, if inflation's manageable right now and the Fed's cutting soon, what's there not to like right now? So let's buy some. Now, consumer prices rose 3% year over year in September, which was the fastest pace since that of January, but still shy of the 3.1% economists expected to see. Core inflation, once you strip out that volatile segments like food and energy, that also rose 3%. Now, month over month, headline prices were up 0.3% and core prices up 0.2%. So they were both smaller than forecasts. And the main takeaway we got from this is that, yeah, inflation is still a little sticky, but it's not spiraling out of control. Housing cost pressure eased a little bit, and retailers, while still passing on some tariff-related costs, they're not offloading everything onto consumers. So that's why we saw tariffs push up apparel, furniture, sporting good prices, but at the same time, other categories cooled instead. Now, this is where it gets a little interesting. So the US has collected $30 billion in tariffs last month alone, but companies are adapting. They're finding loopholes, exemptions, or they're simply just eating part of the cost. And that's what's kept inflation from running hotter. Still, it's a fine line because if tariffs stick, those costs eventually do trickle down somewhere. Somebody's going to pay it, whether it's the margins of these companies and who watches margins, investors, so the stock prices can move up or down based off of that, wages of consumers, or the consumer's ability to spend. So somebody's going to get hit eventually. Now, this report basically gives the hand to the Fed it gives the Fed the green light to continue cutting rates. They're right on track just next week on October 29th. Now, right now, for the December meeting, markets are pricing in the odds of a 94.4% chance of a Fed cutting rates, ending us at 3.5 to 3.75% on the Fed funds rate by December 10th. So at the October 29th meeting, what this is saying is we're expecting to see 25 basis point rate cut on October 29th, and then on December 10th, pretty much another rate cut expected then. Now, if inflation keeps drifting lower, it'll soften resistance from inside of the Fed, from those officials who still worry about price stickiness and these increases from tariffs, because at this point the real concern isn't inflation anymore, it's the labor market, and we've been talking about that for quite a while. And hiring's cool, job openings are shrinking, and consumers are showing fatigue. They're getting kind of tired. So we got a piece of data today from the University of Michigan. This was the University of Michigan Sentiment Index, and it slipped to 53.6 in October from 55.1 in September. So some people are just tired of these high prices. Even if inflation is easing on paper, the prices don't go down when inflation's like not existing. They're just not going up anymore. Inflation is the rate at which prices increase. So they're also noticing certain services getting more expensive, things like lawn care, like daycare, elderly care, care altogether. All sectors hit hard by labor shortages and these immigration curves from the current administration. And meanwhile, the government shutdown keeps on rolling. It doesn't seem like an end's in sight, and it's now affecting data collection. So the White House confirmed there won't likely be this October inflation report, so don't get your hopes up, because when you think about it, surveyors can't gather price data while furloughed, so the September numbers may be the last clear inflation read we get for quite a while, at least until things open up and we get some normalcy around here. And this is where it gets a little jaw dropper. So the Pentagon said it received a $130 million private donation to pay military personnel during the shutdown. Trump called it a friend of mine. It could be Elon. It could literally be anybody. But this person wanted to help cover any shortfall from the government shutdown extending. And that's less than 2% of one pay period, but symbolically it's huge. And some even see it as giving the White House more runway to, let's say, allow the shutdown to drag on and continue. So that's what we got. Stocks moved on all of these pieces of news, and they're kind of preparing for what we got next week. So next week's lined up, we're pretty stacked. Big tech earnings start rolling in. We got a lot of large companies reporting earnings. The Fed's October rate cut decision. Trump's Asia trip, where he'll meet leaders from Malaysia, Japan, South Korea, and China's Xi Jinping. So that's the one the markets care about the most. But between now and then, the question: does this cool but sticky inflation backdrop give the Fed the confidence to keep cutting, or does the shutdown and the tariff backdrop keep the policy makers on edge and another excuse to keep going? So let's just kind of look at what we got. So Sunday, October 26th, that's when Trump will head out to Malaysia. October 27th, he'll be in Japan. We got like Dr. Pepper, Whirlpool, Waste Management earnings to look forward to. On Tuesday, UPS, Visa, United Health, PayPal, Sherwin-Williams, NVIDIA CEO will have like this keynote about artificial intelligence. Trump will be in South Korea. Looks like we could possibly get some consumer confidence data and Case-Shiller data. Fed meeting October 29th with some big players, Microsoft, Alphabet, and Meta. Shoot, Starbucks, CVS, Caterpillar, Verizon, Boeing. Woo! And then Trump, it looks like Trump will be in China on Wednesday, and then on Thursday, more big O companies reporting: Amazon, Apple, Eli Lilly, MasterCard, Shell, Hershey, Coinbase, and we're expecting some type of return. And the European Central Bank rate decision, which I'm sure people will comment on. And then Friday, it looks like we'll end off the week on just some earnings. So that's what we'll be watching for next week. But the takeaways from today is that inflation, it came in softer. It's progress, but we're still above target. And then the Fed's now free to act. Cuts are likely to be seen on this October 29th meeting. It looks like 25 basis points of a cut is what we'll expect to see. But to be honest, their tone's going to matter a lot more than the cut itself, and especially since there's just so much different moving pieces, even beyond the data right now. And then the third major takeaway is that consumers are fatigued. Prices may cool, but sentiment hasn't caught up to that yet. And the main bonus is that this $130 million donation story is just a reminder that politics, economics, and perception are all feeding into this market, and we don't know where we're going to go. So we'll see how all of the market digests this into next week. Big tech, the Fed, and trade talks, they're all lined up back to back to back to back to back. I'll talk about everything that happens, all of the what's news in the space. Hope your day was amazing. Hope your weekend is amazing. And I'll see you later. Y'all have a good one.